3 SPAC stocks or special purpose acquisition companies for December 2020. These are 3 SPACs that are still in their searching phase that I believe have great management teams. And as of Monday night's close, the common stock are trading for below the amount of cash they have in the trust, which means that in theory, there is no downside risk on the SPAC common stock if you decide to request your $10 per share back just before a business combination is completed. Just remember to take that with a grain of salt, because a SPAC common stock is not FDIC insured. So yes, you can still lose your money if some kind of black swan event happens. So be sure to manage your risk appropriately. I personally would not invest more than 10% of my investable money into a pre-merger SPAC, but your mileage may vary. In fact, all of my SPAC plays represent less than 10% of my entire portfolio, as most of my investments are in long-term buy and hold investments in companies that I know, like, and understand well. In this video, I'm only going to be discussing how I'm playing the common stock and the warrants, not the units. And remember, unlike the common stock, the warrants do not have any rights to the cash in the trust. Warrants can and do expire worthless. And I made an entire video about SPAC warrant basics if you're interested. A link is in the video description. So let's get into these 3 SPACs right after. I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, my channel is primarily about investing in the stock market. If you want to learn how to achieve financial freedom through investing, be sure to click on that subscribe button and notification bell if you haven't yet. And please remember to drop a like on this video if you enjoy it, as it truly helps out the channel. So without further ado, the first SPAC we're going to be talking about is E.Merge Technology Acquisition Corp. On Fidelity, the ticker is ETAC for the common stock and ETACW for the warrant. As a side note, the warrant might be listed differently depending on what brokerage you use. And on some brokerages like Robinhood, you currently cannot purchase warrants. So this first SPAC pick is a rollover from last month. Full disclosure, I'm currently invested in both the common stock and the warrants. The reason ETAC is still a pick for December is because its common stock was trading for $9.86 when I made this video, which is less than the roughly $10 per share that's in the SPAC's trust. The management team includes several former directors and executives from technology companies such as SAP, DocuSign, Docker, Autodesk, and others. Like I mentioned in my last video, I'm speculating that Docker could be one of its targets. If it is Docker, I may even end up holding this stock long term. And one more thing that I know you APXT fans will like: 2 of its advisors also served as advisors to APXT. If you don't know about APXT, they just announced a merger with a technology company and Microsoft partner, AvePoint. I made a video on this recently and I'll leave a link to it in the video description. So check it out if you're interested. I think that this SPAC's management team has a good chance of picking a winning business combination target. Like I said, I already purchased the common stock and the warrants. My cost basis for the common stock was $9.66. My cost basis for the warrants was $1.04. My current plan is to just hold the common stock until a merger is announced and then reevaluate. For the warrants, I plan to do the same, but if for some reason the warrants pump in price before an announcement, I may just sell the warrants and take profits. Okay, so SPAC number 2 is Recharge Acquisition Corp. On Fidelity, the ticker is RCHG for the common stock and RCHGW for the warrants. Its common stock was trading for $9.93 when I made this video, Once again, this is less than the $10 per share that's in the SPAC trust. Its CEO is Anthony Kenny, former president of convenience store Speedway. During his tenure as president, the company grew from primarily a 9-state Midwest convenience store chain with approximately 1,600 locations to the nation's second largest company-owned and operated convenience store chain. One of the directors is Mitchell Steenrod. He is the retired Senior Vice President and Chief Financial Officer of Pilot Travel Centers LLC, doing business as Pilot Flying J, the nation's largest operator of travel centers. He joined the board of CarMax in 2011 and currently serves as the lead independent director. Another director, Donald Graber, was a director at Precision Castparts, which was sold to Warren Buffett's Berkshire Hathaway for $37.2 billion. One more director I wanted to mention was John Bachman. He was Chief Operating Officer of the assurance practice at PricewaterhouseCoopers, or PwC, in the United States, which represented over 50% of PwC's revenue. He also serves on the board of the Children's Place, WEX, and Grocery Outlet. This management team has a very successful track record, and I think they have a good chance of finding a winning business target. I don't own any shares yet, but my current plan is to purchase the common stock around this price, but I may try to get greedy and wait for it to go even lower before I purchase shares. The warrant is trading at 82 cents, which I also think is a good price, but I may also try to get greedy and wait for it to go even lower to around 50 cents. The third SPAC is Good Works Acquisition Corporation. On Fidelity, the common stock is trading as GWAC and the warrant is trading as GWACW. The common stock was trading for $9.80 when I made this video. Once again, less than the $10 per share that's in the SPAC trust. Fred Zeidman is co-chairman and CEO. He was a lead director at Straight Path Communications. I had to do a little digging, but what I found was that Straight Path was a $6 per share company that got sold to Verizon for $95 in just 5 years. That's a 15-bagger in just 5 years, which is incredible. So this director has a proven track record. Douglas Wirth is the other co-chairman and director. He had senior leadership roles at JP Morgan from 1997 to 2016. He was CEO of alternative investments for JP Morgan Asset Management, where he managed businesses and over $120 billion in alternative assets. He was also CEO of JP Morgan's International Private Bank. I think this is a very competent management team that can find a good business combination target. I don't own any shares yet. My current plan is to purchase the common stock around this price, but again, I may try to get greedy and wait for it to go even lower before I make a purchase. The warrants closed at 73 cents, which I also think is a good price, but I may also try to get greedy and wait for it to go even lower for around 50 cents per warrant before I make a purchase. So those were my 3 pre-merger SPAC picks for December 2020. Let me know what you think. Drop me a line in the comments. Be sure to leave a like on this video before leaving. Thanks for watching, and I will see you next time.